Hello. How's everybody doing? Yeah. So I just want to say thanks to Kat. So I literally saw one of the people on our team signed up while you were talking. So you at least have one more customer. Yeah. Well, first off, welcome to Tally. My name is Jason Brown. I am one of the co-founders of Tally, and we're really excited to have all of you here. Because I know everybody's probably tired. It's the end of the day. I'll make sure you get out of here at 8 o'clock on time. Okay? Does that sound good? Perfect. Well, maybe I'll kick things off with just what Tally is. Tally is the first automated debt manager. What that means is that Tally figures out the smartest and the fastest way to eliminate your credit card debt, and then it actually does all the work to get you there. It's kind of like autopilot for your credit cards. Now, 4 years ago when we were figuring out, my co-founder and I were figuring out how we were going to build our next company, we were focusing on credit card debt. And the reason why credit card debt grabbed our attention is that there's over $1 trillion of credit card debt in this country, and that 44% of households are shouldering about $15,000 in debt. And this means that the typical household is collectively, they're leaving about $100 billion on the table in terms of unnecessarily high interest rates and fees. And we realized that there is no solution in the marketplace for this group of people, and that we wanted to build something. But we had a broader vision, and our broader vision was represented in this home screen. So the folks in the back probably can't see this. It's a picture of a person with their feet on the table drinking a cup of coffee. Now, here's what we wanted to do. We wanted to build a completely automated experience. We didn't want to build a tool. We didn't want to build a recommendation engine. We wanted to build a fully automated experience that would take all the cognitive and functional load off of people's lives and do the work for them. So we got on our computers and we estimated, okay, if we raise maybe 4 or 5 million bucks, we have a year, we can totally build this. $42 million, and 3 years later, we finally launched. So as it turns out, automation is really hard. And it's that last 20%, as Marco will, and many of the folks on our team will tell you, that last 20% is really, really hard. And if you think about what went into having an app that has that kind of a picture on the screen, well, we had to build a bank from the ledger up. So we built, literally, starting at a ledger, an entire bank core. All right? We have to do algorithmic lending and risk underwriting. We actually have an entire capital markets infrastructure where we're selling bonds to Wall Street to finance all of this. And actually, I don't know if folks saw a little shout out. So Erica Dorfman, raise your hand. Yeah. So Erica was just named to the Forbes 30 Under 30 today, which is really cool. And I know you're really embarrassed, but but Erica is our head of finance, and one of the things that we need to do in order to make this screen possible is to sell all of these assets to Wall Street, and there's a lot of things that go into that. So this just underscores that when it comes to automation, there's a lot of work you have to do in order to give the customer an experience that doesn't involve a lot. So here's the thing that really speaks to me and to my, I guess, my childhood, if you will. My co-founder and I are both finance dorks, and we were focused on Tally in the early days of this is about saving people money. We were really focused on that. And then we started doing research to understand how people feel when they're managing their credit card debt. And we use this thing called the State Trade Anxiety Index. It's this medical instrument you use to measure people's anxiety in a certain situation. And we were shocked to find that the majority of people with credit card debt have medical levels of anxiety when it comes to managing their cards. So this is comparable to you're sitting in the doctor's office waiting for some test results. That's the kind of anxiety people are experiencing on a regular basis. And for me, this really struck home because I, as a child all the way through high school, my family really struggled with money. And it wasn't that my parents were not good parents. They loved us. I was actually even homeschooled. My mom made bread but from scratch. It was a great childhood. I'm not trying to diss on my parents. However, we kind of sucked at money. And there was just always this underlying stress and anxiety there and feeling how are we going to make ends meet? And even though I've been fortunate to have a different financial path than my parents, that anxiety, it's still there. It's so ingrained that the idea that so many people in this country are feeling those kinds of emotions on a regular basis, to me is really sad. And what I think is exciting about automation is it has the potential not only to make people better off financially, but actually take some of that emotional burden off of their shoulders and put it onto the shoulders of technology. And to me, that's the biggest thing that motivates me and makes me really excited about what we do, is making people's day-to-day lives better because they just feel better about the world and their ability to go around without having that kind of a tax on their day-to-day lives. So what's next? Before, let's say, 10 or 12 years ago, most people had very few financial relationships. And then the financial crisis hit, and all this innovation from Fintech started happening. And now the economy's better. We kind of forgot about the Great Recession, and banks are catching up. That's the headline, is the gaps that the big banks left, that the Fintechs filled, they're now copying as fast as they possibly can to catch up. And the reality is they don't have to be that good. They have such immense access to capital and millions of customers that they can be 60, 70% as good as these innovative products, and they can still keep their customers and they can maintain their market share. And so we're generally pessimistic about Fintech's ability to differentiate when it comes to just doing things banks don't do or providing a different interface, that when the economy is good, the banks will end up taking those opportunities away. So for us, it's automation or bust. We believe that the only way that you can really separate yourself from the existing financial institutions is through automation. Because the thing that banks don't do as well as tech companies is to automate things across multiple institutions. They're very good at doing things in their one silo, but across the entire financial institution, they're not as capable. And Tally, we've taken a little different approach than the savings and investing route. We started with debt because it's one of the most widespread problems that Americans are facing. But our end belief is that in the future, every single one of us will have a completely invisible and ambient service that makes most of our financial decisions for us and does most of the financial work. And there are quite a few companies, and some of them are on this list, some of them are not, that are working towards, one way or another, whether they've stated or not, are working towards that point. And that is the worst possible scenario for banks. What their big threat is that they will be converted into a utility. This set of financial pipes that the companies that did the automation layer, they own the relationship with the customer, and then they just use the financial institutions and infrastructure to do the bidding of the customer, and the banks don't make all the money. So I wanted to propose a thought experiment. And the thought experiment is this, is what if you could port your entire bank account, okay? So either you or your financial AI could essentially press a button and your entire checking account could move from one institution to the next in a matter of seconds. It takes all the auto debits and credits, all of those things that are associated with it, and it just moves it from point A to point B. What would happen? Now there's an interesting corollary to this that happened in 2000. So let's see, I'd say, how many people here remember when you would switch between cell phone providers and you had to give up your phone number? Okay, good number. So for those of you who this is shocking to you, is there was a time where if you wanted to move from T-Mobile to Verizon, you had to get a new phone number because that phone number belonged to T-Mobile. And all economists will tell you anything that causes frictions between consumers making decisions means that those providers of those services make a lot more money. Okay? Anything that creates friction between choosing between A and B means that incumbents get more rich. And so finally, the government came in and said, you know what? Customers have the right to take their numbers with them. They can port their phone number. And so in 2000, the legislation went into place, and suddenly people could move providers and actually take their phone numbers. And what a study out of Berkeley showed that immediately right after this was passed, people that were medium to high users of cell phone plans saved between 6 and 10% right off the bat. because now the providers had to compete more on price and value because they didn't have this extra kind of monopoly on your number. And what we've seen since 2000 is the carrier industry is not all that profitable because all these carriers have to aggressively compete for your business by giving you more minutes, now they're unlimited, more data, now it's unlimited, higher quality service. They have to compete aggressively to keep you, which means they have to give you more and more value as a consumer. Now, if this were to happen in the financial industry where every single one of your decisions was made by an AI and every single move was made by an AI that wasn't limited by the number of minutes in a day, didn't have any limits in knowledge, what it would create is that all of the financial products that are currently so profitable for the financial industry would be now sold at marginal cost to all the consumers, and all of the excess money that currently you see in the form of big buildings, people with expensive salaries and nice suits, big returns to shareholders, all of that excess financial value would be collapsed and would be distributed to consumers. So our belief is that at the end of the day, automation actually equals inclusion. Is that when you can give what rich people already have, and rich people already have automation, they just pay people in office parks to do their automation for them, right? That's just the reality. Is like if I had $1 billion, I'd probably have a minimum of 5 to 10 people that work in an office park, and I've got my tax loophole specialist and my accountant and my investors, and they're grinding away. Well, let's see, what would I be doing if I had $1 billion? I would be in Patagonia doing some amazing trekking, and I'd have my satellite phone, and they would only bother me when they needed to ask like a human question. Like they'd be like, "Hey, do you need a helicopter?" I'm like, no, I'm pretty good. I don't need a helicopter, right? But they're not asking me what form they should file or what security they should buy or sell. All that's abstracted away from me, and they're just working on doing my bidding. And that's what we're working on at Tally. And we believe that by working on full automation to distribute to everybody at close to zero cost, that we would be able to bring what rich people already have to the masses, and at the end of the day, that will deliver an immense amount of financial value to all of us and any consumer, as well as take away that emotional burden that many of us are carrying. The end. So I'm 2 minutes under 8 o'clock. You want to do a couple questions? All right. Cool. Yes. What's your name?
Rin.
Rin? Nice to meet you.
Nice to meet you. Love the vision, so it makes me want to sign up somewhere.
All right.
What I'm
Tally in the App Store.
What I'm curious about is this is a really great vision. I think this is a really great way. But like, what stops anyone else from doing automation? What stops the larger financial institutions from saying, yeah, of course, let's make this accessible? Like, what's your moat, or what do you see as being kind of differentiating moving forward, like providing automation to consumers?
Yeah. So the question for those who couldn't hear, what's the moat? What's the differentiator? So for established institutions, they have a difficult time doing things across all the institutions, right? So Tally, you can put in your Capital One card and your B of A card, and we're managing all of that, right? Whereas the existing banks are not as inclined to build this automation layer across other institutions and enable a customer to use all these different financial products from their competitors, right? So that's not in their best interest. And the reality is there's a lot of fintech startups that are working towards this objective of automation, and it really comes down to building the technology and it's data feedback loops, because the more data you can get, the more work you can do for people. The more work you can do for people, the more value you give. The more customers you get, the more data you then have to get more insight to do more work. So it's that virtuous cycle of being able to provide more utility to customers. And again, the reason why we started on the debt side is we wanted to work on a problem that was fairly universal. Whereas, like, let's say Wealthfront was working at the top of the pyramid of people who have a lot of income and assets. It's a much smaller group of individuals that can benefit from that. So we said, let's start towards the bottom of a more universal problem, because it gives us better access to data and a higher ability to serve more people. Yep.
I don't mean to be crass. The approach you're describing is from a technology perspective. What's the indication from a consumer's perspective that they're ready to give up the control in the way that you're describing? I mean, I love it from a technology perspective, but it feels a little academic because the customer's not coming through in this.
Right.
What's the indication that they're going to accept this and be willing to turn it over?
Yeah, I think the biggest metric we've seen internally is 99% monthly retention. So once somebody gets set up with Tally, they tend to stay with Tally. And also we see it in our App Store reviews, like the Apple App Store, of people that are using the product, almost all 5-star reviews. So once people experience that automation, they don't want to give it up. But I do think it's fair to say that each person has an adoption curve of like when they're going to be comfortable with that. One of the benefits of starting with credit card debt is the emotional pain is really high. So there's a desire for a solution, and that helps a lot of people be comfortable with that kind of a situation. Whereas maybe if they didn't have that pain, they'd be less willing to take risk. Yeah, cool. Well, I think we're coming up on 8 o'clock. One more question? All right. Madame?
But there's limits, right? And so what do you have in your roadmap to address some of those limitations in terms of like the amount of credit card debt that you're able to help people with?
Yeah, so that is our, well. There we go. So they're on a timer. That means it is actually 8 o'clock. So the question, and this is a reference to Tally has credit requirements, so you have to have certain credit requirements to get into Tally. Our big initiative for 2019 is working on a universal product that can support everybody regardless of their credit quality. And this has always been our plan. We wanted to start with a very focused and narrow product, which targets the 80% of credit card balances that Americans hold, and then we're looking to expand. So we just closed our Series B this summer, and that allowed us to hire a lot more engineers, which we really, really needed, and grow the team so that we can invest more in those products. So thanks for asking. That was a great question. So with that, I just wanted to also thank Francis, our head of comms and PR, who helped facilitate all this. And I don't know, is Gemma here? Oh, there's Gemma's right there on the front row. Gemma, thanks for facilitating everything. All right. With that, have a lovely evening.